battle unfolding in Washington and on Wall Street over the future of money. The Clarity Act remains stalled in Congress, and stablecoins continue to see regulatory progress this week. The latest FDIC rulemaking moves stablecoins from a regulatory gray area into a structured bank-like framework. And the White House Council of Economic Advisors released a report where effectively threw its weight behind stablecoin rewards, countering long-held fears from the banking lobby. While stablecoins differ from tokenized deposits, tokenized deposits are the banking industry's defensive response to stablecoins. They represent your actual bank balance, but recorded on a blockchain ledger. Well, joining me this morning at the New York Stock Exchange is Gluchowski, who's Matter Labs co-founder and CEO. Now, Matter Labs is the developer of ZK-SIG. Well, great to have you here. Thank you so much for joining me.
Really excited to be here.
Well, as 2026 gets underway, all eyes are on what's happening on the regulatory front. But for the layperson out there, can you walk us through the actual difference between a stablecoin and a tokenized bank deposit?
Absolutely. So technologically, they are both underlying the same basic technology or product. It's both tokenized assets that can use all the benefits of blockchains. The difference is more in how they're treated from the legal perspective. Stablecoins are bearing instruments, tokenized deposits are actual representation of your deposit at a bank, and so they are treated the same way. You have FDIC insurance, they're staying within the perimeter of the bank, and the bank can use the deposit funds to actually execute their banking activity. So it's from the banking perspective, it's actually the same thing, just a higher utility on the side of velocity and efficiency of operations.
And you and I are here at the New York Stock Exchange, and when we're talking about what's happening between TradFi and DeFi, give us your take on privacy, especially privacy technology, where we stand right now.
Privacy is a critical blocker for traditional institutions to go on chain, whereas the crypto-native world has not cared that deeply about privacy for the last years, maybe assuming that pseudonymity on chain will be sufficient. This is absolutely not acceptable for banks. This is absolutely not acceptable for real businesses that move real operations on these tokenized rails. They have to observe their regulations in different jurisdictions, and they also have business interests, and they cannot just disclose all of their flows to their competitors, to the entire world. And this is why blockchains with privacy is really the enabler that has permitted the banks now to move into this space. This is something that we're building with zero knowledge proofs, which is this amazing new breakthrough technology that gives you the benefits of privacy and security of public blockchains and connectivity of public blockchains for the first time.
And in a nutshell, you also announced a partnership with BitGo. So tell us what's happening, and in a nutshell, can you explain the infrastructure?
Absolutely. So the BitGo partnership enables banks to have a full stack solution out of one hand, essentially. We partner with these institutions to give them the tokenization platform, the blockchain infrastructure with privacy and connectivity to others and public and private chains. And now also the regulated custody with BitGo as a public company. They have a lot of experience in this. They are one of the most highly regarded secure platforms for tokenized custody. So now these institutions have everything they need in one go.
And finally, before I let you go, there is no single magic bullet for privacy, but give us your take on what needs to happen and, of course, the timeline for you and BitGo.
So this privacy technology that we're building called Previdium is available now, and we see institutions are moving into the space. I was just 2 weeks ago at the DC Blockchain Summit in Washington, where we announced the partnership with the Carry Network building on Previdium. This is a network of 5 regional U.S. banks founded by the former chair of OCC. So you can see the level of trust that these institutions and regulators are now having in these technologies. It's available now. It's moving from experiments into real production and real deployments this year.
Well, Alex, it was great having you on the show today. Thank you so much for joining us, and thank you so much for laying all of it out for us.
Thank you.
Thank you.